Welcome back to another episode of Brick and Mortar Visibility. I am genuinely excited for you guys to meet today's guest because she is a true expert in her field with nearly 30 years of experience in business, credit, and financing. We have honestly never had anyone like this on the podcast before, you guys. If you have been avoiding debt, go ahead and raise your hand with me. I get it. I've experienced what I would call financial ruin, and climbing out of that was no small thing. So when I finally became debt-free and then had an expert encourage me to consider using a business credit card again, that was not very easy to hear. But today's guest put me in my place in the best possible way with facts, clarity, and a lot of empowerment. Let's meet Gerri Detweiler. She shares practical, healthy ways to approach business credit without fear. She gives us real-life strategies, trusted resources, and smart guardrails to help us grow our businesses responsibly instead of reactively. And that is the key word. She also drops some major, incredible insights on what actually makes your business legit in the eyes of lenders, including the importance of things like your Google business profile and even your social media presence. Yes, those are things that matter more than people realize. So here's your reminder. If you haven't updated your Google business profile lately, go do that. And if you're not sure how, you can grab my free workshop linked here right in the show notes. We also talked about with Gerri the biggest myths around business credit, the most common mistakes brick and mortar business owners make with financing, why avoiding credit completely can actually limit your growth, and her surprising favorite way for business owners to access money. It's not what you think. You can also learn more about Gerri and her work through her links here in the show notes, and I've included her full bio there as well. So without further ado, I am honored to introduce you to the incredibly insightful, brilliantly intelligent, and deeply, deeply helpful Gerri Detweiler. Let's get real. Are you a brick and mortar business owner that has put your blood, sweat, and tears into creating a storefront that lights you up and serves your clients really well, only to be frustrated that you're the best kept secret in town? If you're not hearing your new clients say, "I found you on Google," then you are in the right place. Welcome. My name is Melissa Rose. I'm a mom, a brick and mortar business owner, and your straight shooting visibility coach. I've cracked the SEO code to becoming the top choice on Google in my industry. And now I'm sharing the secrets on this podcast. Get ready for stories, fail-proof strategies, and practical tips to elevate your brick and mortar presence to the top choice on Google. Let's get real because we're going to make your business the only option in town. So Gerri Detweiler, thank you so much for being part of the brick and mortar community. I'm super excited to have you on the podcast today talking about our financial health in our brick and mortar businesses.
Oh, I'm delighted to be here. Thank you.
Yes. Where are you coming in from?
I'm actually in Spain right now. So
you are all over. Every time I hear you, you're in a different place. You're in Spain right now?
I am. Yes. I've been doing the digital nomad thing for about 6 months now, and it's been a lot of fun. Yeah.
Oh my goodness. Okay, so just a little personal stuff. So do you have a partner? Are you married?
I am. I'm married. My spouse is with me. He's retired. And my adult daughter, who recently graduated with her 2 master's degrees from Europe, is also with us at the moment. So, it's quite the adventure. A lot of fun.
Okay, so I've doing my research. You were in Portugal. You were in, right? Yeah. No.
Yes.
Were you in Croatia? You've been all over.
I've been in Croatia.
Croatia was where I heard. And then Sarasota, Florida. Is that home? Florida?
Sarasota, Florida has been my home base for about 25 years. Yes. Okay. Yes.
What's next? Where are you going next after Spain?
I'm actually going back to the States, see my family, and then to who knows where. I was just filling out my global entry application to renew it the other day, and you have to list all the countries you've been in the past 5 years, and I started going down the list. I realized I've been to 19 countries in 5 years, which just blew my mind because I had no idea it was that many. But yeah, it's been quite the adventure. It's been a lot of fun.
Good for you. That's amazing. All right, so let's dive in because this is going to be a juicy podcast, everybody. This is stuff that I didn't know, and now that I am growing my brick and mortar business, I'm going through that process of securing financing. So I'm so glad you are on the podcast to give me some tips, but also selfishly give me some tips, but also help our audience too. So, what is one takeaway you want brick and mortar business owners to learn by the end of our podcast today?
The one takeaway I'd like them to learn is that your business can build its own credit rating, that you can do that regardless of where your personal credit stands right now. But having strong business and personal credit can open up more opportunities for your business. So if it's not something you've been paying attention to, I hope you will decide to do that by the end of this episode.
All right. And you're going to show us how and where to do that. So you've been in the credit and finance world for over 30 years. What originally pulled you into this type of work and why have you been doing it for so long? What's kept you in it?
It was a complete accident that I fell into it when I graduated from college in Washington, D.C., needed a job, and ended up with a nonprofit that was doing advocacy work in the field of credit. So it just was one of those accidents that worked out. And because there wasn't the amount of information about personal credit that's available right now at that time, there was a lot of visibility. So when I started in this industry, you didn't get free credit reports, not annual credit reports. Credit Karma didn't exist, none of that. And so it's kind of fun for me that I've seen that evolution in the consumer space. And so when about 10 years ago, I wrote my book, Finance Your Own Business, with attorney Garrett Sutton, and looking at business credit and business financing, and discovered that the same thing was happening on the business side, that there just wasn't much visibility. We don't have the
Oh.
same consumer protections on business credit. So even though, fun fact, Abraham Lincoln worked for one of the major business credit bureaus back in the day, even though
Mm.
they've been around that long, I would hazard to guess that you probably haven't looked at your business credit. It's
No.
present on your radar, right? Yeah, for a lot of business owners, that's the case. And so it's fun for me to get to not only introduce it, but to introduce it in a way that hopefully makes it a little easier to navigate, because it is not quite the same as consumer credit in terms of, transparency and your rights.
Is that because most of us are LLCs, or I shouldn't say most of us, but a lot of us are LLCs? Is that why? Or sole
Um,
proprietors?
yeah, it's really the reason there isn't, in my view, in my experience, the reason there isn't as much transparency is because the bureaus don't have to reveal this information. So just like they didn't have to in the consumer credit world until, the Fair Credit Reporting Act finally gave free annual credit reports and said you have to put them in plain English. That doesn't exist on the business side. And generally, what has happened on the business side is that legislators feel like business owners are sophisticated. They should be able to hire an attorney or a financial planner or an advisor who can help them navigate these
Mm.
things. But the reality of small business in America is that the large majority of business owners operate as sole proprietors, so
Yeah.
they don't even have a business entity, much less, if they do, they might be like you and me with smaller businesses, maybe some employees, but you're not a huge business. And so this is something you kind of either learn about the hard way, or you don't learn about it and then you miss out on potential opportunities because you didn't learn about it.
Okay. Okay. So is there a belief you hear over and over that's actually holding business owners back, or a myth about business credit that you wish would disappear?
Well, the one thing I wish would kind of disappear is the hype online about business credit, because there's a lot of influencers who make it sound like, well, if you just build business credit, you can get millions of dollars in funding, no personal guarantees, it's going to be super
Mm.
easy, and we're going to show you how. And the reality is much more grounded, in that lenders don't want to take unnecessary risk. So simply having a particular credit score isn't what makes a lender either say yes or say, hey, we're not worried, we know you're going to pay this back. It's a combination, just like it is with personal
Right.
lending. You go to get a mortgage, right? They look at your income, they look at how long you've had that job, they'll pull credit, they'll calculate a debt to income ratio. Business lenders know that businesses, some don't always make it, and so they're going to take steps to
Hmm.
be careful as well. So it's one piece in the puzzle. It's not the only piece, but it's one piece in the puzzle. But it is an important piece if it ends up being a hurdle to you going to that next level.
Hmm. Um, you talked about in a past podcast about three spokes or can you know what I'm talking about, right?
Yeah, yeah.
Of for the financing. What are they
Yeah.
looking for?
Yeah, so typically lenders are looking at three major factors when you're looking at financing. One is your revenues, and for that, they're usually going to want to see bank statements. So business bank statements for at least the last 3 to 6 months. Go to a bank, it's probably going to be 2 to 3 years,
Right.
and or business tax returns. But they're going to want business bank statements. A lot of the online lenders, and you do have to be careful here, of course, you're dealing with a reputable lender, but a lot of the online lenders will just ask you to connect your bank account so they can review the information, not necessarily to take money out, but to review the information and see what your cash flow looks like, what your revenue looks like, cash flow looks like. And a tip here is that many lenders want to make sure you're not overly reliant on just one client. So
Oh,
depending on
sure.
your type of business, they may want to see revenue coming in from different sources. And another tip that I think is especially applicable to someone who is in a creative business, a studio, something where you're selling those kinds of services, is I would encourage you to run all your business revenue through that one account, because you might be on site somewhere and accept Venmo, or you might have a client who wants to pay with Venmo. You might accept, Cash App, or it might be PayPal. Don't use that as a separate bank account if
Right.
possible. Deposit that money into your business bank account so the lender and you also have a full, picture of your revenue. And you've had a couple of great financial interviews recently with Paul and with Christine, and I think we're all sort of talking on the same page, that having that picture is really important. So that's the revenue piece. The second piece is your time in business. So many lenders prefer to see that your business has been in business for at least 2 years. Now, some of them may want to see 2 years of revenue, but not all of them do. I mean, so another tip here is if you're starting out, you're thinking this is what I want to do, but maybe you're not making a lot of money yet. Think about going ahead, if you can swing it, and of course talk to your advisors, forming your business entity, whether that's an
Mhm.
LLC or a corporation, sooner rather than later. And I say that for two reasons. One is that can establish that time in business, right? So
Mhm.
you're on the map. That formation is with your state records. The business credit bureaus can pick that information up. And then the second reason is because if you later go from, being a sole proprietor to that business with a business entity, you have to get a new employer identification number from the IRS. And that could trigger, it could essentially be seen as a new business. And so any efforts you've made to establish business credit as a sole proprietor you could feel like you're having to start over again. Not
Right.
always, but it's not unusual for that to happen. Sometimes the credit bureaus can link the two businesses, but it's nice to have that clean start. And so you can, I don't want to discourage anyone who's listening though, who says, I just can't do that. Like I cannot, I know, for example, California, California has a steep fee for forming a business, the franchise tax. So it's not small amount of money. So if that's the case, then just understand if you are operating as a sole proprietor, then look at other ways to establish your business's presence. So for example, it might be filing a fictitious name, doing business as with your state.
Mhm. Mhm.
So proprietors can request an EIN. They can file under their social security number, but they can also file under an EIN. It's free from the IRS. Takes 10 minutes to get it. So, and then take that date, like the date you received that EIN, and keep that letter. You might need it in the future. My corporation was formed over 20 years ago. I just got asked for that recently. The
Right.
copy of the letter to prove that.
Exactly. I did too. I was like, ah.
Yeah, exactly. So keep that letter, but then you could use that consistently as your formation date. So what I'm trying to get at here is, even if you don't feel ready for the big time yet, doing these things now can trigger that start date, so that as you grow, you then have that history behind you. So there are businesses that have only been around for 2 years and maybe only making much money for the past 6 months, but they still have, from the lender's viewpoint, they still have the 2 years in business because they were a legitimate established business for 2 years. So that's the second factor.
Okay.
So revenue, your time in business, and then credit. And credit can be personal credit, it can be business credit, or it can be both. When you're a young business, your personal credit will be important. You will have to rely on it for different types of products. That's probably a given. But there are some great business credit products out there too, as as you start to bring in revenue that could be available to your business. And I will add that the SBA and some microlenders do fund startups. So the SBA it's not a grant, it's a loan, and you would have to have a good, solid business plan. The lender needs to feel comfortable, but about 17 to 19% of the money from the SBA 7A program, which is their most popular flagship lending program, goes to startup businesses. So it is out there and it is available. And then, so credit is the other one, and we can talk more about credit if you like. And then the other one that I'll just add is the industry. Now, this is what it is, right? You are in a particular industry. So if you're in the fitness industry, if you are a glass blower, if you have a service industry, you have to find what's called your NAICS code. It's North American Industrial Classification System, NAICS code. And it's free. It's not assigned to you. You fill it in. You fill in the blanks here. So you can go to the US Census website. So we know about the census, which every 10 years goes around and asks people questions for, the demographics of the country. Well, the Census Bureau has a separate section for this code. And the reason they do is because it was created for tracking business information. It's a statistical tool. So you can go in there and start looking and try to find the code that's closest to your business. And sometimes it can be a little tricky. It may not exactly match what you think you do, but they want you to find the code that matches your primary source of revenue. And here's another tip. For free, the census has a service called Dr. NAICS, and you can email them. It's on the census website. You can email them and say, here's what my business does. I'm having trouble picking my NAICS code. Can you help me? And they will help you. It's absolutely free. I would do that sooner rather than later, because if you don't, what happens is you default to whatever you get assigned, one of those drop-down menus when you apply for a credit card, whatever. And in my case, with my business, I've never been what I call a credit counselor. I've been in consulting, education, writing, freelance speaking, etc. But mine was listed as credit counseling, and credit counseling is considered kind of high risk. So there was a lot of shakeup in that industry a few years ago. So it's not a great NAICS code to have for what I do, because it's not really what I do. Right? So you don't want to be miscategorized if possible. You want to be proactive about choosing that. But that's important because lenders may say, you know what, we've already made enough loans into this industry this past year, or we want to lend into this industry, so we're going to buy a list from these credit bureaus and try to market to businesses in that industry. They can even take your industry and compare your credit with other businesses in that industry to see how you're performing on your credit. So there's just a lot of ways it comes into play. I've given you a ton of information.
No,
so
you did. So, and I'm thinking, is that like auto-fed after you fill out an LLC? I'm remembering something like this.
Yes, you'll see that if you form a business entity, you'll see it as well. So it's just something to have on your radar. And if your business is in the stage where you're thinking about forming an entity, go ahead and spend a little time on that site and figure out what makes the most sense, so you can be as accurate as possible in filling that out. Very often that will be requested by lenders, and then it may end up on your credit report.
Sure, that makes total sense. Okay, so talking about that personal and business credit, for our brick and mortar businesses listening who've never really separated the two, what is business credit versus personal credit? And at what point should we really start to be thinking about our business credit?
Yeah, well, the ideal time to think about business credit is when you're getting started in your business, because the sooner you do it, the more proactive you can be. Most business owners are like the average business owner. They don't know anything about it. They don't do anything about it until it comes as a problem to them, right?
Right.
So So you think about it early, but these are credit bureaus that have been around, as I mentioned, a long time,
Right.
and they collect information about businesses. So Dun& and Bradstreet, one of the oldest credit bureaus in the U.S., they're one of the major players in the space. Experian, which you might know from your consumer credit report, because they have
Hmm.
a business division and a consumer division. So they're another one. And then Equifax also has a business division, consumer division. Those are kept completely separate, those two sets of data. So your business can build its own credit history. And to build a credit history, just like with personal credit, you need accounts. You need accounts that show up with the credit bureau, that show a payment history, and you pay on time, keep your debt under check. I mean, that's how a credit report is created, with the history of how an individual or business pays their bills. The big difference with business credit is that it isn't always it doesn't happen as automatically as consumer credit. You and I go out tomorrow, we get a credit
Right.
card, a car loan, auto loan. It's going to be in all three credit bureaus, right? We just take it as a given. It's pretty much given at
Okay.
this point. With business credit, you might have a lender that reports to one bureau. You might have one that reports to another. You might have one that doesn't report at all or only reports negative information. So you might have to be a little bit proactive about seeking out, accounts that report, and using those to buy things you buy anyway for your business. I definitely don't want people to spend money they don't need to spend,
Right.
but buy things they need for their business anyway, and then use that to help build their credit. One of the biggest ways that many businesses get started is with what's called trade credit or supplier credit. And that's where you're going to get your suppliers to offer you something and let you pay for it later, sort of like buy now, pay later that we're all familiar with in the consumer world. It's often on something called like net 10 terms, net 30 terms. That's where you have 10 days to pay or 30 days to pay. That's a very popular way to start establishing credit, and also to help with cash flow, because it gives you more time to get what you need, bring in money to your business, and pay for it out of revenues.
Yeah. So where are places to do that, to get that?
Well,
Like,
I would
is it
certainly
just
check with
getting,
your own suppliers and ask them whether, so if you have suppliers for
okay,
equipment,
okay,
for janitorial supplies, whatever it is you're buying, and
okay,
ask them if they report and if they offer payment terms. So that's a great place to start. Another
okay,
place, NAV does have a list of what we call easy net 30 vendors, vendors that report, that don't check personal credit. So if you
okay.
just go to nav.com and click
Hmm.
and put net 30 into the search bar, you'll find a list there. So that's another option to get started. And then the other way you could do it is to get a small business credit card, because most of those
Right.
do report to at least one of the business credit bureaus, or there's another component, a data warehouse called the Small Business Financial Exchange, that feeds it information to those bureaus. So they do tend to report at least somewhere that could
Okay.
potentially build your credit if you pay on time. Yeah.
Okay. Oh my gosh. How are you guys doing? You keeping up? I'm writing down notes. Take a
Okay,
sip of water.
I'm gonna offer a checklist to make this easy. So just so you know, it's free.
Oh my goodness. Oh my goodness. Um, okay, so as brick and mortar businesses, we're handling the lease. Okay, we're expanding. That's where I am right now. I'm in the process of building and growing out build outs. We have the equipment, we have hiring staff. What do you see most often with mistakes, mistakes? Where do you see those credit mistakes showing up?
Well, the number one mistake is just not actually proactively building credit, because then you may think, and I've heard from so many businesses, new and 10 years
Yeah.
plus old, who say, I check my business credit and I don't have any credit. Um, I just heard from somebody who has a business, whose podcast I was on a couple of years ago, and she said, I just got my business credit report. It says, my one is a D in the free version of NAV. It's letter grades, not scores.
Hmm.
Why is that? And I said, well, the chances are that you don't have any accounts reporting. So it's a low
No,
credit
yeah.
score. It's not that you did anything wrong. It's not
No,
that you
yeah.
paid late, um, but you need to check to make sure it's, of course, not business identity theft. So I think that's the number one mistake. And then I think the other mistake is a lot of businesses, and this is sort of related to what you're facing, they wait until they're already in the process of needing
Yeah.
something really quickly. And then suddenly they feel like, oh, there's this whole world that I don't understand, that I don't know, because it is confusing. The
Yeah.
business financing world is more confusing than consumer credit. Because I think in consumer credit, we kind of know the basics, right? Your credit card, like I said, student loan, mortgage, auto loan, those are pretty personal loan maybe. But business credit, you have all different kinds of financing, and you'll have a lot of companies trying to push you for financing that may turn out to be really, really expensive, and you don't realize it. So you have to be even more sort of buyer beware in the business world.
I feel like I am getting poked for apply for loan from QuickBooks, from PayPal, from Stripe, from any vendor that I use. So that would be like just guide us there because that's where like
Yeah,
um,
yeah. So
I
that
can't
type of
even ask the question. I'm
financing.
just like there's just so many places to go, and I heard you on another one where the overall cost of that might be more than getting a personal loan or
Right, or even a credit card.
right,
Even a
exactly, that's
business
what it was.
credit
It
card
was
at
the credit card pretty
19.8%. Yes.
exactly, yeah.
Yes, yes. So a lot of that type of financing where it's based on the revenue that your business is bringing in, it's often falls under the category of cash advance. And when we think
Right.
cash advance, a lot of us think of our credit card, where we can get a cash advance on our credit card. This is more like a cash advance for a business, and it originated out of businesses that did a high volume of credit card sales. And then the processor would come in and say, hey, we can advance you, you know, 3 months of your the average of 80% of your last 3 months revenue. We'll give it to you right away, and then we'll just take a little sliver off each time you
Right.
repay it. So that's how this can work, because you're receiving money through PayPal or through a merchant processor, for example, and so they can take a little bit off of each sale. The challenge, I would say, there is that the pricing can be confusing, because if you start digging in, a lot of times you don't see an APR, which is an annual
Hmm.
percentage rate, which is what we use in the consumer world to compare interest rates. You might see different, like a fee, let's say a fee, this much of a fee, and you have to you have to figure out, how am I going to convert that to an APR to see what kind of an actual cost I'm going to be paying. And I'll give you an extreme example. And again, I'm not writing this on necessarily PayPal, Amazon, or any of those, but this was an extreme example. There was an article in Forbes. A woman owned a hair salon, wanted to buy a hair salon. She was working in the salon. The owner was going to sell. She got a financing term sheet, and it said like 15% stated percentage or something like that. The terminology was something to do with stated percentage. And when that was run through a calculator that converted it to the APR was over 1,000%. Holy cow. I can see your expression. Yeah, yeah.
Wow.
Over 1,000%. So that is an extreme end, but it's not unusual to see in certain segments of this industry where people need money quickly and they don't understand what they're getting into, that they could pay 30, 50, 90% or more. And there's times when that might make sense for your business, but for business owners who are more proactive, there are better deals out there, and that's what I would encourage you to think about before you desperately need it, before something dramatically changes. That could be a crisis, but it could also be an opportunity, right? You have the opportunity to
Right.
buy that equipment from the other studio that's going out of business.
Hmm. Hmm.
And you can get it at a really good price, but you need some money to do that.
Yes.
That's a great example of where it can be very beneficial to have financing available. Line of credit, lining up a decent line of credit, that's a great place to start, because that's there when you need it, but you don't pay interest on money you're not using.
Right. Right. Okay. Such great information. Thank you, Jerry. Um, what are some financing? financing options small business owners may be overlooking, especially outside of traditional banks?
Well, one that I absolutely love these days is crowdfunding. So if you haven't checked
Really?
out crowdfunding, please check it out. It's growing so rapidly and it has so many benefits. I'm not saying it's always the easiest thing to be successful with, but there are keys to do it. So I'm going to give you a resource,
Yeah.
crowdfundbetter.com. That is a website that has a cheat sheet you can download for free.
Mm-hmm.
The founder of that, she does a great job teaching both business owners and advisors about crowdfunding, and she also did her own successful campaign. But it will walk you through the different platforms and who they're right for. So there's rewards-based crowdfunding like the Kickstarters and Indiegogos that we've heard of. There's equity-based crowdfunding like WeFunder. There's debt-based crowdfunding like Kiva, Kiva.org. Kiva makes 0% interest loans up to $15,000 in the US.
Wow.
0%, zero fees. They're a nonprofit, so that's an excellent opportunity to look at. So you have equity, rewards, and debt, and then you have the charitable ones, which is not used as much by business, but sometimes it is. Sometimes people love a business owner. The business owner is facing a huge medical personal crisis, and so they get together and crowdfund with GoFundMe for that business owner. But the other three potentially have a lot of potential. I think especially for the audience who's listening to this, who has something where you either have a passionate base, people
Yeah.
who love your business, and you have people who maybe want to support you because they know you are the real deal, right? And so whatever
Mm-hmm.
it is, your art, your product, your service that you provide the community,
Sure.
some people are more than happy to get behind those kinds of efforts, and then it kind of multiplies because then they feel like they have a stake in your business, so they want
Yeah.
to they
Yeah.
want to help you be successful.
That is so, I'm so surprised by your answer there, but I love it because for that local business owner, for sure, being that community staple or gem in the community, that I can see where that's really, really successful.
Yeah, and one
Interesting.
more community resource I'll mention are microlenders. So these are lenders that are usually funded through community development financial institutions, nonprofit organizations that are designed to help support development in the community, right? Bring jobs, bring opportunity to a community. And they can be such a great resource for funding sources, especially for people who are maybe in more challenging economic circumstances or economic areas of the country. Unfortunately, they're a little bit under some funding crises perhaps right now with the environment going on. But hopefully we'll get through this, and they will continue to. I know they're working as hard as they can to continue to provide funding. But what they do is often offer smaller loans to businesses that, and then offer some type of mentoring or counseling to go along with it. So you're not just getting money, you're
Mm,
getting
mm,
someone to help support your business. And there are directories of these online. We have one at NAV, but you can also reach out to your local small business development center or
mhm.
SCORE mentor, and they often know what's going on in the community as well. So that's another resource, and those would be loans that you would pay back usually at a very reasonable interest rate over 5 to 10 years.
I love that you mentioned SCORE. Can you just tell our audience a little bit about SCORE?
Yes, so SCORE is a volunteer network of people who want to support entrepreneurship around the country. And so a lot of times people have run companies, they've had great jobs, and now they just want to do something meaningful. So they
Hmm.
mentor business owners for free. And then the other companion organization, which is also part of the SBA, Small Business Administration Resource Network, is the SBDCs. And these are sort of a best kept secret. These are small business development centers funded through the SBA, and they provide free business mentoring as well. And they're all over the USA. I've met many of these advisors. They're tirelessly working to support business, and they do
Hmm.
amazing work. So you can find any of these resources by going to the SBA website, sba.gov, clicking on local assistance, and find your local resources. Reach out. Don't, there's so many good resources like your podcast, like
There
all the
is,
things that are
there
out there.
is.
Just take advantage of them.
Yeah. Reach out, take advantage, ask the questions, be vulnerable because we all don't know it all.
Yes,
But somebody knows
exactly.
something really, really well,
Yes.
like Gerri here, we can dive in. I just want to ask one more meaty question. What systems should somebody be putting in place before they need funding? I just like the top three or top five things that you should be
Yep.
doing right now. I don't have a business credit card. I run everything through my business debit card. I don't have like a Amex or anything like that
Okay.
for business. Um, and I feel like I need to now
Okay,
because
I would
I
let's
don't
just
want
talk
to
about that
have the
real
credit.
briefly.
Yeah,
Okay, so you are like many business owners. You don't want debt, so you
I don't
avoid
want that.
credit, right? And so
Yep,
by avoiding credit, you don't have build a credit history.
exactly.
So let me just challenge your thinking here for one moment. With business debit cards are not covered under the same consumer protection law as business credit cards. So with a business credit card, if it's lost or stolen, $50 is your maximum liability for unauthorized use. With a business debit card, it's not covered. It's not covered. It's voluntary. So chances are your bank will eventually make you good on it. But I interviewed a business owner who had her bank account drained one day, and it took her 90 days to get her money back in her account. And think about
Ouch.
90 days without access to your money in your account. So one option is to get a business charge card. That requires you to pay in full each month, but it has the same protections as a credit card. So if your card is lost or stolen, used by a crook, $50 is your maximum liability. So that's, Amex is probably known as the charge card king, but there are other options out there, where you pay in full. So that might be something for you to think about. The other thing is, if you're charging a lot to your business, you could probably get some amazing rewards, either in cash back or in travel rewards. So just think about it. I'm not going to push
Mhm.
anyone into getting something they don't feel comfortable with. But you can do it. You can have like the best of both worlds with a
I
charge
know,
card.
I know, I
Okay.
know.
All right. So think about that. And then it will could help you build business credit if it reports and you pay on time. So the other thing you need is a business bank account. Everything runs through that bank account, bank statements. You need your bookkeeping up to date. And anyone who's like freaked out about that, listen to the interview with Paul. He was so good. He was so clear. Um,
Yeah, he was.
yeah, and so just get your bookkeeping on a schedule because you may need to provide, that financial
Yep.
statement information. And then just look at these foundational steps that we talked about. Do I have an EIN? What is my Google, profile say about my business? Have I claimed it? Little things like that might seem sort of off, I don't know, off the major radar because it doesn't factor into personal credit, can be important because a lender wants to look at what's the risk of lending you money. And so they're going to look at the whole picture. And in this world of business credit, there is a lot of fraud and there's money laundering and all kinds of stuff that goes on. You don't want to fall into that trap. You want to show them, I'm a real business, I'm legit. Here's how I
Mhm.
can show you that. Here's my documentation. And that can make all the difference.
Mhm. Okay. You have a plethora of resources. You mentioned some right here, but where can people maybe can you share maybe like three, you have some blogs that you've written that have been really helpful for people, maybe the top one or two, and then people can dive in more that you would
Yes,
refer people.
sure, sure. So first of all, we have a page on the NAV website, NAV as in Victor, nav.com/Gerri. Now I'm going to spell my name because it's not what you're probably hearing in your head. It's Gerri, so Gerri. And if you go to that page, you will get a free guide you can download right there. You get a link to other resources, so you'll find a whole bunch there. And then on the NAV blog, we have hundreds of articles about these topics. So if you type in build business credit, you're going to get a guide that I've written and updated
Mm,
and rewritten and added to a
yep.
gazillion times over the past decade, and hopefully get your questions answered there. And if you don't, NAB is there to help you as a resource. You can sign up for absolutely free with NAB. You can use the free forever plan, or you can do a paid plan. But either way, you're going to get resources that will help you start navigating this often very confusing world of business credit.
Okay, and NAV, what does NAV do for us besides offer us education and resources like that?
So probably the easiest way for me to help you think about NAB is sort of like Credit Karma, but for business. So
Okay.
it is the place where you can check, manage, and monitor your business credit and personal credit in one dashboard. get financing recommendations, and also, get other tools to help you build a financially healthy company. So it's a platform designed to help you do all these things that we've talked about.
Wonderful. Awesome. This was very helpful, very,
Good.
very one of a kind, unique, because nobody else. So I was super excited to get you on the podcast because, like I said, I'm in the process of this and securing more financing for the build out, and just these are like, ooh, what's she gonna say? What do I need to work on
Oh, cool.
and get
Cool.
things working for us? So
Yeah, and I
I
want to
hope
give
you
one more quick tip, if
please,
you don't mind, because you
yeah,
mentioned build up. Anyone who's thinking about real estate for their business, so you want to open a studio, you want to buy the building,
yeah,
look at 504 loans. That's an SBA product, and the interest rates are so good. So just SBA 504, look it up.
mm-hmm,
Any SBA lender who makes SBA loans is going to be reputable because the SBA, the Small Business Administration, has to approve them. So
mm-hmm.
they can be great loans if you qualify. So just throwing that out there.
Thank you. Thank you. Thank you. Jerry, it was a pleasure to have you on the podcast. Thank you so much. And just one more time, tell people where to find you.
Yes, nav.com/Jerry with AG.
All right. Awesome. All right, everybody. I look forward to hearing your comments, and find us on social and let us know what you thought of the podcast and took away. Thank you so much. Everybody, we will see you here, same time, same place next week. Peace. Bye bye.